All right, what's up, YouTube? So it is Monday, Motivational Monday. I'll give you guys a quote out of this book here, right? Remember this book here? Let's see, what's a good quote? Let's see this. We'll give a good quote for you guys, and then let's get into trading. Yeah, some more trading stuff, right? Man, now I'm trying to think real hard what to give you guys. Aha. Chapter 3. Build confidence and destroy fear. Yes, fear is real, and we must recognize it exists before we can conquer it. Most fear today is psychological. Worry, tension, I feel like I'm just reading the whole book here. Embarrassment, panic, all stem from mismanaged negative imagination, but simply knowing the breeding ground of fear doesn't cure fear. So, number one, fear stops people from capitalizing on opportunity. Fear wears down physical vitality. Fear actually makes people sick, causes organic difficulties, shortens lifespan. Fear closes your mouth when you want to speak. Lack of confidence explains why we still have economic recessions. Fear explains why millions of people accomplish little and enjoy little. Fear is a powerful force, prevents from getting what they want from life. No one is born with confidence. See? But anyways, let's go ahead and talk about trading, because I'm pretty sure a lot of you guys are, right? Probably wondering what is going on with the markets right now. And I have to say the markets are going pretty crazy since yesterday. But I just want to talk about, I'm not going to talk about coronavirus because I know a lot of people are already looking into that already. So, you already know that what the coronavirus has already been doing, and we're not going to hop into that. But I just want to hop into, looking at the DXY and why I look at it. And so a lot of people were asking me back then, like, hey, crew, why do you look at the US dollar index, and what makes it so important, right? You have to remember that the US dollar is the number one base currency, and everything revolves around the United States, economy wise, economic wise, imports, exports, everything's being traded with the dollar or against the dollar. So I look at the DXY a lot. I don't look at it, as much as I used to, but my go-to was that if the dollar was going down, right, then I would sell, right? I would sell the US dollar based pairs. For example, I would sell USD Swiss franc. I would sell USD CAD. I would sell USD JPY. I would sell USD to the peso, USD to Donald Cronish, USD something, right? Because US dollar is the base currency. And then I would go ahead, if US dollar is on the sell, right? Then I would go ahead and buy, right? I would buy gold. I would buy the Aussie dollar. I would buy New Zealand. I would buy euro to the dollar. I would buy the pound to the dollar. I would buy anything against the dollar. Now, from what I've seen right now, things have changed, right? The correlations of pairs that we're following the US dollar don't really follow it. Like you can see, how Wall Street has changed, right? Dramatically within the year from last year until now. You can see where gold's headed right now. You can see that the Japanese currencies are in a different market of volatility right now. And especially for the Asian currencies right now that are facing against the coronavirus, and all the new fundamental events are going to come out and play out this year. So before all that, right? Before all that, I would look at the US dollar. I would always look at the DXY. That would be my go-to. That would be my go-to currency, because in the book Currency Trading for Dummies, where's my book at? Currency Trading. Oh, I have it. I have it. Is this book, in case, this book right here, Currency Trading for Dummies, on page, if you have it, this is the 3rd edition. Right here, guys. On page 26, I have it highlighted, and the bottom it says US dollar index. So I'm going to read this right here for you guys. The US dollar index is a futures contract listed on the New York Board of Trade, NYBOT, and Dublin-based financial instruments exchange, the Finex, whatever. The dollar index is an average of the value of the US dollar against a basket of 6 other major currencies, but it's heavily weighted toward European currencies. And then it shows you it shows you on page 27 like how much of the European currencies, the pound, Canada, Swiss franc, how they actually are percentage wise weighted against the US dollar. So pretty important. And this what changed my way of trading when I first read this book 3 years ago. Right? When after 6 months of losing all my money trading live. My first 6 months of trading back from January 2017 and all the way to June of 2017. And then the bottom page is also important, right? It says that the US dollar is the most important global currency with the bulk of forex trading usually involving the dollar on one side of the transaction, right? So that's what I was talking about. Like if US dollar is going down, then I would sell USD JPY, I would sell USD CAD, I would sell USD Swiss because the US dollar is the base currency of that pair. Let's see here. Commodities are priced in dollars, and vast amount of global currency reserves held by central banks are in dollars. So that just tells you how widespread the US dollar is globally, economically, in every single country. This makes the dollar also affectionately referred to as the greenback or the buck, the most liquid currency in the world. So the US dollar is the most liquidated currency in the world. As a trader, you need to know if the dollar is strong or weak. How about that? The US dollar index helps you do this because it gives you a broad-based view of how the dollar is performing in the G10 forex space. As a currency trader, be sure to follow the US dollar index, especially its technical developments. And then on page 28 talks about gold, oil, and stocks. Now, I didn't read it from there, but I did read a little bit about gold. But I'm not talking about gold today. I'm talking about the US dollar index today. So let's go back and talk about the US dollar index. This might be a long tutorial, which I have a feeling it might end up being. So, with this, right, with looking at the 4 on the US dollar, right, we can clearly see the downtrend, right? And if we look at the monthly, right, I'm just going straight to the monthly. We look at the monthly. Okay, I was kind of right. We look at the monthly, massive, right? How massive this bearish engulfing candle is already pushing down pretty hard outside this bull channel here, right? We go to the weekly, right? Let's go to weekly. Right, this would end up probably being the 3rd bearish candle. So it would be like the 3 crows. The 3 soldiers are the 3 bull candles if you read a candlestick Bible. After that, I'll probably be looking for some kind of pullback, some kind of bull candle retracement, right? A retracement bull candle. When looking at the weekly, we're probably looking at the daily and the 4 hour. Some kind of structure to show some kind of support. So based on this, it wants to actually build support here at 95 to 95. Yeah, pretty much at 95, right around here. I don't go anything lower than the 4, but let's hop down to the 1. With the 1 hour, you can see how the gap is down, right? The open gap of opening down, right? They shot it down. The lowest price right now is 94.6, and there is some support here. I'm looking at 95. I'm going to be treating 95, looking at 95 as a support price right now. but you're still in the overlap of London, New York right now. London and New York does not. They still have one more hour of the overlap, so don't get too crazy on trying to anticipate on holding a buy, unless you bought the buy at the very bottom of the wick. So, but like I said, that was my go-to. Like I said, it was something that I always look at. I still look at it till today, just not as I want to say it. I don't look at it consistently like how I used to because of what has happened fundamentally over the years of trading forex. You know, with me following the US dollar index 3 years ago and up until now, the US dollar index is just on its own now. And whether the pairs are following the US dollar or not, you can start seeing that most of the correlation of the pairs are not really following the US dollar index as they used to. So we have to look into what is really playing the major role right now. Coronavirus, right? The Fed decided to cut interest rates, and now the Fed is already doing it again, right? Their goal is to cut more interest rates this year. So this is just the first one. They're talking about three more. So that's pretty crazy for them to cut rates, especially right before um, right before, I guess, the presidential campaign. So I don't know what's going on, but like I said, I mean, you can see where Wall Street's headed right now, right? You can see the commodities, right? Gold is being already broken to 1700 structure price, and we could probably see, maybe an early correction to maybe an early recession. So that's just the way I'm looking at it right now because of things are headed down really fast for this week. And it's only the first, what is it? No, we're coming to what? The second month. I mean, not second, it's the second week of March. And so the third month of this year, and things are really getting really crazy for the markets over here. So I don't know, like I said, that's just my input for what I'm seeing currently and how I was using the US dollar index. And so I hope that you guys are having a successful Monday, a successful week, and much love to you guys, all the subscribers and followers and people that's been believing in me, because I want you guys to be much more better than what I'm doing. So I want you guys to take this to a whole new level of trading for yourself and be more positive, like I said, and work on your craft and make sure that you are um, on the right path, not on the other path of losing more. So other than that, peace, guys.